Good morning, everybody. We're here with Neil Wright from Tower Street Finance. This session is geared around the solutions that they've got and how it's helping practitioners at the moment to, I suppose, further support their clients, additional products in the portfolio, and just to know a little bit more about what other providers in the industry are doing. Tower Street Finance and WillSuite partnered up recently to present this session to another group, and we're backed by popular demand. So any questions as we go through the session, feel free to unmute and ask those, or alternatively put it in the chat section or the Q&A section just at the bottom. With that in mind, I'll probably pop in with a couple of questions, if that's all right, Neil, as we go through.
Yeah, of course. Yeah.
But I'll hand over to you to let us know a little bit more about Tower Street Finance.
Thanks, Tom. And first of all, thanks for inviting me again to these sessions and all your support, your continued support for Tower Street. I'm a business development manager for Tower Street. And as Tom's mentioned, I've been invited along just to raise general awareness of Tower Street Finance's suite of products and how we can help you and your clients. So without further ado, I'll just dive straight in. First of all, an agenda. We'll cover all our suite of products, of which there are 4. First of all, we'll talk about our flagship product, Inheritance Advance. This is around about 2 years old now. We follow that up with our IHT loan. Does what it says on the tin. It's an executor loan used to pay inheritance tax, funnily enough. And then our third product is our first foray into litigation funding. It's called Inheritance Dispute Funding, and it's aimed at contentious probate. And then more recently, we've launched our fourth product, Estate Expense Funding, and this is used to pay other testamentary expenses. There's a common DNA running throughout all of our products, which we'll talk about, as well as cost. We've kept cost consistent across all products. And I have included some case studies. And as you'll see, there is no such thing as a typical customer. Tom is nodding his head knowingly there, because he knows for a fact that will be repeated several times throughout the presentation. We wish there was a common customer, a typical customer, but we do seem to work on quite convoluted cases. But I suppose those are the cases that require our help more often than not. And then I'll talk about identifying the need. So the flags that you need to be aware of when speaking to your clients or customers in terms of which of our products will appeal to them. So our flagship product, Inheritance Advance, in a nutshell, we can lend up to 60% of their expected inheritance, and we can lend at pre-grant of probate. There doesn't even need to be a will. In many instances, it can be easier when we're following rules of interstate, and these funds can be used for whatever purpose they like. And we have had a whole multitude of reasons, and we do ask. There's been a massive number of applications from people simply looking to make ends meet. And at the other side of the spectrum, we've had a healthy number of applications from people who see this as risk-free access to cash to take advantage of an opportunity. We've had a dentist who needed funds to buy into a practice, and we also had an accountant who borrowed a 6-figure sum for management buyout. So again, I'll repeat that term, there is no typical customer. So the structure of our flagship product, we can advance a proportion of a beneficiary's inheritance, and as I mentioned, we can do that at pre-grant of probate, and this is secured by an assignment of their rights. They assign their beneficiary rights to us until we're paid back, and that is our security. The beneficiary receives funds today. The reason there's an asterisk there is it's contingent on how much they're looking to borrow. Anything above £60,260, we can release the same day upon completion of underwriting, which typically takes 3 to 5 working days. Anything below that figure, so anything below £60,000, there's a mandatory 2-week cooling off period. It's an FCA mandated process. My personal opinion is they've got that the wrong way around, but there you go. And they make no regular repayments. We wait until the estate is liquidated and the solicitor is ready to distribute. So there are no ongoing repayments to make, eating into any disposable income. Across all products, again, you'll hear this echoed throughout all products. We insist that the case is professionally administered in all circumstances. So that means typically a law firm is instructed up to and including distribution. So case studies. Case study 1, unlocking an estate. In this estate, as in a lot of estates we work on, the main asset is a property. 6 beneficiaries, all siblings or step siblings. 1 beneficiary was still living in the property and just simply couldn't afford to move out. The other 5, understanding initially, but how long is a piece of string? We stepped in. We issued an advance to the beneficiary, which enabled him to move out. allowing the sale of a property and the liquidation of the asset, and distribute to all six happy beneficiaries, and dodge the potentially contentious situation. Case study 2, a difficult beneficiary. This is a estate of £500,000 being shared between a nephew and 2 uncles. Again, main asset was a house. A dispute arose on how much to sell the property for. Uncle 1 wanted to accept a pretty derisory amount, while the other 2 wanted to hold it for a more realistic and commercial offer. I think Uncle 1 was in a different financial circumstance to the others. So we advanced a proportion of inheritance to Uncle 2 and nephew to pay off Uncle 1. So he's walked away happy with the cash he has in his bank, and the other 2 are now free to focus on a more commercial outcome for the property sale.
I'm guessing, I mean, it's certainly common, isn't it, that lots of estates are asset-rich, cash-poor, perhaps. So that's an ideal product, I suppose, where the main asset is the property, and where they just want to release or get a bit of money in for the beneficiary sooner. Is that what you tend to see?
Say again, Tom.
Is it typically speaking? Is that product typically used where the estate is asset-rich and cash-poor?
No, not necessarily. The IHT loan, which we'll come on to, it is typically asset rich, cash poor. No, not necessarily. This is just aimed at people who want access to their inheritance sooner for whatever reason, and it doesn't have to be that there's only a property involved. We'll lend against cash in the bank, listed stocks and shares. Typical rule of thumb is if it's easy to value with a ready market, we'll class it as a net lendable asset. We'll steer clear of livestock or a racehorse, for example, that could be worth £1 million today, but very little tomorrow, or the price of glue. Good question, but no, it's we've had a whole spectrum from there being cash in the bank that they just want access to, up to the main asset being a house.
Thank you.
So then our follow-up product, IHT loan, does what it says. Does what it says in the tin. This is an executor loan, as they combined an estate to a testamentary expense, and we pay these funds directly to HMRC to unlock estates caught up in the IHT conundrum. Particularly useful when the estate is asset rich but cash poor. So the structure of our IHT loan, we will pay all or shortfall of the IHT payable by the executor or personal representative. The only prerequisite here is that the payment that we make to HMRC must unlock the estate and give the solicitor the ability to apply for grant of probate. We pay HMRC directly, and again, no monthly repayments to meet and no personal liability to the executor. Beyond anything fraudulent, there is no personal liability. Again, you'll see shortly when we talk about the common DNA, all these loans are completely no recourse. Again, the loan is repaid at distribution as a testamentary expense. And again, we insist that the case is professionally administered in all circumstances. I think we have a question. As Ella's asked, presumably the disgruntled uncle had to sign something to say he has received his share and isn't coming back for further share when the house is sold. I will have to look into the specifics of that one. It wasn't one I worked on, but yes, one would assume so. But I can respond to that later on after the presentation, if that's okay. So again, we insist that the case is professionally administered in all circumstances. And it doesn't matter if the executor or personal representative are replaced, the IHT loan still qualifies as a testamentary expense and ranks senior to any distribution. A couple of case studies. IHT deadline, this one actually displays how swiftly we can move through underwriting and solve a problem for somebody. An estate worth £4 million, all in property, some residential, some commercial. Inheritance tax had to be paid by end of March. The solicitor had exhausted all their options to get this liability paid. They approached us and sent us information at 10 p.m. on Monday, the 22nd of March, and we paid HMRC directly at 10 a.m. on Friday, the 26th of March. So we can react quite quickly once we've received all the relevant information. Case study 2, professional executor. Deceased, this was a solicitor who was acting as an executor. The deceased left an estate worth £1.5 million, £1 million house and £500,000 ISAs. The solicitor was appointed as a professional executor, but she wasn't able to pay IHT. There were 3 other executors, again, none of whom had the ability to pay this liability. So the IHT loan was structured with joint and several liability between the executors. We don't need to do that. One executor can bind the estate to the testamentary expense. In this instance, they're more comfortable with all three signing a loan document. So again, happy to be flexible in order to make people comfortable. End result, IHT loan paid directly to HMRC, estate unlocked. So our third product aimed at contentious probate, inheritance dispute funding. We will fund the legal fees of somebody who is contesting a will or defending a claim. Typically, we'll look at strong Inheritance Act 1975 claims, in particular, a disinherited spouse or a child made insufficient provision for. Alternative to a strong Inheritance Act claim, we'll look at any claim whereby there's a minimum inheritance regardless of legal outcome. So the structure of our IDF product, we agree a funding amount up front and we'll fund the case up to our agreed maximum. We release funds upon request from a solicitor in instalments as required. Again, the only stipulation here is we'll only pay for work done, not work anticipated. And we pay these funds directly to the solicitor. Again, no repayments to make, not eating into any disposable income, and no personal liability to the beneficiary. The funding is repaid from the proceeds of their eventual inheritance. And even if the case is lost, there is no personal liability to the beneficiary whatsoever. Again, these are no recourse loans. We don't put any charge over property. Beyond anything fraudulent, if the case went against us and the inheritance was insufficient to pay us back, we write that off. We don't pursue anybody for any shortfall. And then our fourth product, our most recent product, is estate expense funding. This is a funding facility for executors to fund testamentary expenses. We can pay inheritance tax with this as well, but this is to pay the broader spectrum of testamentary expenses aimed at executors who just don't have the funds readily available to fund these costs, as well as solicitors or law firms who are acting as an executor to clear off any WIP and fund these expenses moving forward. So typically, we'll pay solicitors' fees, funeral costs, property valuations, house and garden upkeep, and inheritance tax. So again, we'll pay all or shortfall of the testamentary costs. We agree a funding facility up front, and the solicitor draws down in tranches. We pay directly to the solicitor, and again, no monthly payments and no personal liability. The loan is repaid at distribution as a testamentary expense. And again, we insist that the case is professionally administered in all circumstances. I think I've hammered that point home enough now. And again, it doesn't matter if the executor or personal representative are replaced. This still qualifies as a testamentary expense and ranks senior to any other distribution. A couple of case studies. Squabbling siblings, which we've over the past 2 years learned isn't uncommon. Father died, leaving two sons joint executors and beneficiaries. £750,000 estate. Solicitors already paid various expenses, including insurance and house valuations, etc. Siblings just not on speaking terms, and neither had funds or was willing to pay IHT or probate fees. They took an estate expense funding loan out in both the names. Again, this didn't need to happen. One can apply for loan, but just to save any potential contentious situation, the loan was taken out in both names. Again, end result, inheritance tax paid to HMRC. The solicitor was happy that he was paid the remainder, and the estate unlocked and property could be sold and estate distributed. Second case study for our EF product, this was to remove a caveat. Father passed away, leaving a second wife in the property, which formed a major part of the estate. A daughter from previous marriage was the executor. To delay probate and prevent her having to move out, the widow took out a caveat, which repeated over a period of 2 years, and just simply refused to engage in conversation. The daughter was under pressure from other beneficiaries to lift the caveat to proceed with probate, but no money was available to pay the costs required to do this. This was classed as a testamentary expense, so the EEF could have been taken out by an executor. So I mentioned the common DNA. We've tried to keep the benefits consistent across all our products, as well as the cost. So there are no credit checks, and individuals' creditworthiness just isn't a consideration. The other checks we do are basic ID and V checks, bankruptcy checks, and UK bank account checks. As long as somebody has the right of residence in the country and a UK bank account and isn't bankrupt, they're essentially pre-approved. We don't put any charge of a property. So whether you're an executor applying for an IHT loan or beneficiary applying for a beneficiary loan, an advance on your inheritance, we don't place charge of a property. Your assets aren't at risk. This is unsecured lending. There are no repayments ever. So once we've issued the funds, the beneficiary or executor doesn't physically pay us back. We wait until the estate's distributed to pay back. So again, for those applicants who are struggling to make ends meet, we're not adding another debt to service and eating into that disposable income. And advances are paid at distribution. So I mentioned before that there doesn't even need to be a will. In fact, it can be easier in many instances. The financials, so how much it cost. Interest is 1.5% per month rolled up, which is 22% APR representative. I did mention that there is a quirk with the inheritance dispute funding product and the EEF product. In those instances, again, as mandated by FCA, we have to show the representative APR as if the whole funding amount was drawn down on day one. That's unlikely. We don't charge interest on the funding amount, only what's drawn down. So for example, if a solicitor approaches us with a case that needs £50,000, typically they'll send 10 invoices at £5,000 each, as opposed to drawing all £50,000 immediately. So the APR can work out between 14 and 18%, contingent on when in the month we're invoiced. And again, that's similar with the EEF product. We don't charge interest on the agreed funding amount, just what's drawn down. On all products, we charge a 2% arrangement fee, which can be added to the loan. I think 100% of people who have taken a loan from us has added it to the loan, and that's capped at £1,500. We'll lend up to 60% of their inheritance for inheritance advance, and we'll fund 100% of costs for inheritance tax, IDF, and EEF. And it's open-ended. We never recall the loan in. We will wait until the estate is ready to distribute to be paid back. Saying that, there are no early repayments. Conceivably, you could take a loan in January, pay us back in February, and you've paid 2% arrangement fee and 1.5%. And to be fair to the customer, we stopped charging interest at 30 months. Because again, I think a lot of people come into the probate process not understanding how long it can take from, unfortunately, somebody passing away to the estate being liquidated. So to be fair to the customer, we stop applying interest at month 30, but we don't call the loan in. Again, if it takes 5-10 years, we'll wait until the estate's ready to distribute. So what's in it for the customer? Very straightforward. Customer gets some of the money early for any purpose. Again, being it make ends meet, up to taking advantage of an opportunity, or alternatively, disputing your inheritance. We're not reliant on a customer's credit rating or circumstances. Again, there are no credit checks. We don't leave any footprints on any files. A customer's credit rating simply isn't a consideration of ours. The customer is never personally liable for a loan beyond anything fraudulent. These are no recourse loans, whereas the moment we've issued the funds, they can rest easy at night. And because we bear all the risk and risks that we bear, are another will coming to light, more beneficiaries coming out the woodwork, or the estate just simply liquidates for less. If there isn't enough in the estate to pay us back, we write it off. Under no circumstances beyond fraud do we pursue anybody for any shortfalls. What's in it for you? Again, I'm not sure in terms of audience what you guys do in your professional day-to-day life. Some of these are aimed at law firms and solicitors that we typically deal with. So it's an extra service to your clients. We can help solve the problems. If there is a problem in the probate process that's holding up the process, give us a call. We can potentially help. Saves time and cost. You don't have beneficiaries and executors chasing for updates because of delays beyond your control. We find that as soon as they have some money, then those chases diminish somewhat. It helps unlock problem estates, which are asset-rich, cash poor, and generates business which would otherwise walk away to a no-win, no-fee firm, particularly the inheritance dispute funding product. Again, we can fund the legal fees of somebody contesting an inheritance. And again, that client could have potentially walked away to a no-win, no-fee firm. and not having to fund estate costs frees up working capital for law firms we deal with. We work with a lot of firms who have built up quite a large amount of WIP funding these expenses. This just has a massive beneficial impact on a firm's cash flow. And we do offer a service fee to our partners. Again, we're aware that some firms, particularly law firms, don't want to accept a fee, but we're happy to pay for 2 hours of their time. Any unclaimed fees, we make donations to Cruise Bereavement. And identifying the need, again, there is no such thing as a typical customer. We've had applications from all walks of life, from, again, people just making ends meet up to barristers, dentists, the pastor. I think our FD is the saying in the office is when you send a convoluted case over is you can't wait for a 3-bed semi in Peterborough, because I think a 3-bed semi with £50,000 in a HSBC account I think would be our preference, but we seem to attract a lot of convoluted cases. But do you have any estates where you're aware that there aren't liquid funds to pay inheritance tax? The beneficiary's financial situation is not always obvious. Our beneficiary is chasing for updates. If so, signpost them to us or raise awareness that we exist. Again, these products, they're quite specific and they're quite niche, and they're aimed at people during a very specific point in time. So there's no point giving it the hard sell. You either need access to these products or you don't. So again, my job is simply to raise awareness that these exist. So again, amongst your clients, if you could raise awareness that these products exist, and then just make introductions to anybody who is potentially interested. Tom?
I've got a couple of questions if I can jump in.
Yeah, of course you can.
I'm interested to know, of the 4 products that you've explained today, which are the most, I suppose, common, which you're seeing more requests for, more information about?
Yeah, good question. All popular. We've had an overwhelmingly positive response to all products. But I'd say our estate expense funding product is proving quite popular simply because it covers quite a few bases. We can pay inheritance tax with it, as well as obviously any other testamentary expense. Again, executors who just don't have the funds available or don't want to pay it out of their own pocket, and on the other side of the fence, law firms who are building up quite a bill funding these expenses themselves. So I'd probably say the EEF product has piqued interest slightly more than the others.
With regards to the inheritance advance solution, that I'm particularly interested in. My wife used to work in a probate practice, basically, so she used to help do with the administration of estates. And actually, typically speaking, she was the one that used to speak to the beneficiaries when they were ringing up and asking, "Where's my money?" Can you give us an example, maybe a bit more juicy, an example of what somebody might have spent that inheritance advance product on, or do you not ask?
Well, we do ask, and I'm conscious I'm being recorded, so I won't be vulgar. But we've had a couple of people, be brutally honest about what they're gonna spend the money on. But it's their money. It's there for whatever they please, whether they just want that extension now rather than waiting for 18 months. Whether it is to pay off the mortgage earlier and get rid of that debt, whether it's to help the child get on the property ladder. Again, this no typical customer thing keeps coming back, and there is no real typical usage. We've had some weird and wonderful usages of the product, but it typically sits between those camps: people wanting to make ends meet or people who just want to take advantage of an opportunity.
You mentioned obviously no typical customer, so I've certainly heard stories from probate practitioners where kids didn't realise it was going to take so long to wind up an estate, and as a result they'd gone out a week or so after mum or dad had passed away and put a deposit down on a car that they didn't have, and as a result then they were pressuring for their inheritance sooner rather than later, otherwise they'd have to cancel the order.
Yeah, we've had that. We've had, and we are as flexible as we can possibly be. If somebody needs the cash now, we will try to work from underwriting as quickly as possible, and we have worked to tight deadlines for exactly that reason. Somebody looking to buy a property at risk of falling through, so we've expedited it as much as possible to meet that tight deadline. But yeah, that's a great example of one we've actively worked on.
One more question, if I can just ask one more. Obviously, you've mentioned that there's a need for there to be a professional executor in place. Presumably, I mean, lots of our practitioners are maybe not law firms per se, but they are either insured for estate administration purposes. Presumably, you'll work with them too.
Oh yes, yeah, and yeah, lay executor, yeah. The only executor we don't work with at the moment are trust corporations. We're not geared up for corporate lending, so a lot of a number of law firms, work through a trust corporation when operating as an executor. These are loans to an individual. There are workarounds, so just a firm could appoint an individual as an executor to bind the estate at that expense. But yeah, it's typically lay executors or named partners in law firms typically who act as an executor.
Understood. Thanks. No more questions from me there.
No, fire away. So remember, if the estate has a house in cash, a beneficiary is automatically approved for an advance. Again, provided they're not bankrupt, provided they have a UK bank account and have right of residency in the UK, there's something we can do. And we're always happy to look at specific cases and opportunities on a one-to-one basis, if you prefer. Alternatively, obviously with the permission of your client, of the beneficiary or executor, pass the details to me, and I'll arrange an initial consultation to go through the process and address any questions they may have. So in summary, your beneficiary or executor is pre-approved for an advance. We can solve problems of locked estates, so typically asset-rich, cash-poor. We can help. And the final time you'll hear this from me, but there is no thing as a typical customer. An individual's financial circumstances aren't always obvious. So all we ask is that the awareness of these products is raised, and anybody who registers an interest, please put them in touch with us. And we're always happy to discuss cases with you and all your beneficiaries. And that is it. Appreciate most people didn't ask questions through. Oh, sorry, we've got a couple of Q&As.
Yeah, we've got a couple come through.
How soon after probate do you expect the funds to be repaid? So just as soon as the estate is ready to distribute, we don't put any stipulations on it. With the beneficiary loans, we are technically a beneficiary, and with the IHT loan, it's an executor loan, ranked senior to the testamentary expense, ranked senior to the beneficiary loan. So just as soon as the solicitor is ready to distribute. And what is the process of referral and our input at that stage? Simply pass us the details. Simply send us a name and number, obviously with their permission. Any particulars that you want to share, feel free, but we just need a name and number, and then we can take over at that stage and talk to the beneficiary moving forward, or executive moving forward. All being well, we will then approach the law firm that they are dealing with and ask for all the estate information. But we try not to increase the workload of any law firm we deal with. So any information we ask for is information that they will already be asking for to administer the estate. So will, if there is one, a family tree if there is one, estate accounts, list of assets and liabilities, confirm to us which assets are going to be liquidated. So again, we'll try not to make much more work for them. And again, there's no liability to any law firm that we work with. We don't ask them to warrant any information whatsoever. So if they provide us some estate information and that proves to be inaccurate or incorrect, there is no liability to the law firm whatsoever. And Jawad's asked, did you say you write?
Can I jump in? Sorry, Neil, just before we go on to the next question, can I just jump in on that referral question? So presumably on the process of referrals in terms of giving you that information, before they pass across any details from their clients and before it goes into a bit more of a formal stage, I guess the practitioner in question can ring you up or send you an email and say, I'd love to have a chat about this prospective client that we've got from a probate administration perspective. I'm thinking that we could do this, and you'll go through that with them and help them to understand which product might be right, and if so, what the likely cost would be to the estate, so that they can then go back and present that to their clients.
Yeah, exactly that. So yeah, feel free to pick the phone up. We can have a chat about the potential case. I can triage it pretty quickly and let you know if it's something worth providing more details on. I can provide financial illustrations which clearly outline in pounds and pence what the repayments will be at month 3, 6, 9, 12. So yeah, good question, Tom. So, Joanne, did you say you write the loan off at month 30 or 13? We don't write it off. We just stop applying interest at month 30. Sorry, that's my Wigan accent getting in the way there. Yeah, so at month 30, to be fair to the customer, because yeah, I think majority of people enter this process blind and not appreciating how long the probate process can take. So we stop applying interest at month 30. But we don't recall the loan. Again, we'll wait until the estate's ready to distribute. For property, so Joanne's asked again, for property, do you carry out a survey or rely on the solicitor's valuation? Either or. So if we've been issued with a probate valuation, we will work from that. If we think that we need to do any follow-up investigations or our own surveys, we'll do that at our own cost. But typically, we will rely on the survey provided by the solicitor. But again, if we don't, then it's at zero cost to anybody else apart from Tower Street Finance.
Sorry, Neil, I've got one question. You may have already answered this already, but if there's a second will that comes to light, what's the risk there to the client?
Zero. Again, I don't think it's a legal response, but it's our tough luck. That's the risk we bear. These are completely no recourse loans, so contingent on there being no fraud. If that scenario happened, that's something that we would have to write off. We're obviously insured against those instances, but we want to minimise those instances because our insurance will skyrocket. But no risk for the client, no risk to any law firm who have been providing us information in goodwill. It's the risk that TSF carry.
Thank you.
Adela's got her hand raised. I don't know whether that was whether that was in relation to the question that was put through the Q&A, or whether you've got another question, Adela.
Kind of both. I just wanted to ask, if you are a practitioner who does probate, right? You're a will writer. You're not with a law firm. Would you need to be attached to a law firm to apply for these? Your 4 products, basically.
So do you administer the estate and distribute the funds?
Yes, potentially. But it's not an issue if it has to be with a law firm, because I do 2/3 of my work with a solicitor anyway. But I just wondered if it's my personal work under my company, does that bar me from doing this, or does it mean in that situation it's the clients directly asking you and not me?
So we do require a firm we engage with to enter into an information agreement. It's a 1-page document that just commits to keeping us updated on any progress with the estate, and obviously pay us back upon distribution. So if you're administering the estate and handling the distribution of funds, then yes, you'd be able to apply for these products.
Okay, thank you.
Did that answer your question, Adela?
Yes, it does. Yeah. Thank you.
Do we have any other burning questions for Neil? I think silence is acceptance as a legal principle.
No, well, I appreciate everybody's time. You'll have my details, Tom, if you can send my details to the attendees. If there are any questions that you want to take offline, or indeed any cases you'd like to have a conversation with me about, like I said, I can triage pretty quickly whether it's worth providing us with more information on the case or making that introduction. So yeah, bear us in mind.
Thanks, Neil. I think it's really important that we all understand where we could better assist our clients, and certainly from a probate and estate administration practice for the unregulated practitioner, so to speak, or the self-regulated practitioner. We tend to sort of shy away from things like this. We'll just pass a referral across, but we don't necessarily pay too much attention to how we can possibly additionally support, and that's going to help us develop better relationships, I suppose, with our clients. Have you seen that, Neil, with unregulated practitioners, self-regulated practitioners?
Sorry, it's cutting off
No problem.
sporadically. I heard unregistered practitioners.
Yeah, so essentially what I'm asking is that with regards to this, having products or being able to introduce products and services like this, it gives you an opportunity or a better opportunity to build better relationships with clients, and then I suppose their loved ones as well, the beneficiaries, because it's come as a result of an introduction from said firm. Yeah,
exactly. We're being told it's helping with conversion rates. Having access to these suite of products could potentially convert a client when you're comparing a couple of firms, particularly if you are having problems funding inheritance tax, or there are beneficiaries who are chasing for updates and looking to get access to that cash sooner. So yeah, we're definitely being told that it's helping with conversion rates, cost of service as well. We're seeing an improvement on, simply because once a beneficiary has some of their money, those chases lessen somewhat. So there are real business benefits, as well as helping solve problems for their clients, which is a business benefit in itself, reputationally. There are some real tangible business benefits to engaging with Tower Street and utilising our suite of products. We can pay a service fee, as I've mentioned, but we're acutely aware that not all law firms want to accept this fee. Yeah, hopefully happy clients walking away with solutions to their problems will have a benefit reputationally and in terms of future business.
Absolutely. I certainly think that's been useful. Does anybody have any further questions before we sign off? I can't see anything in the Q&A tab or in the chat, but we've had great feedback. I really appreciate everybody joining us on a Monday morning. Like I say, this will be recorded, so if anybody wants to rewatch it, once it's been signed off by the team over at Tower Street Finance, we'll put that out on our YouTube channel. Anybody who's not following us on YouTube already, please do. It's WillSuite on YouTube, and again, this will be going out through socials as well, so follow us on LinkedIn. Also, good idea to connect with Neil on LinkedIn. Neil Wright. You'll be able to find him on LinkedIn too. But I'll put links and things onto the email that I send around following this session today. Really appreciate your time this morning, Neil. Been really useful. Thank you.
Thanks, Tom, and again, thanks for your continued support for Tower Street Finance, and thank you everybody for joining in and asking questions. And yeah, nice to meet you all. And yeah, as Tom mentioned, send me a LinkedIn request. Anything I can help with whatsoever, please let me know.
Thanks, everybody.
Cheers. All the best.